What's cool about HSAs is that they have tax savings at each level. No other account has this level of tax savings. Step 2 is HSAs. So a health savings account, it's just a really cool account in my opinion. It's the only account that exists outside of FSAs that has triple tax savings. So with most tax advantage accounts like 401ks, Roth IRAs, things like that, they have two tax benefits. They have either you save money when you make the contribution and then it grows tax deferred, but then once you take it out, you pay tax on it at that time. That's a traditional 401k, traditional IRA. With a Roth IRA or Roth 401k, you don't get a tax benefit now, but it grows tax deferred, and as long as certain requirements are met, the money comes out tax free. That's a pretty good deal. What's cool about HSAs is that they have tax savings at each level. So they are tax deferred, so you get a tax deduction now. They grow tax deferred, and as long as the withdrawals are used for qualified medical expenses, essentially health care costs, that withdrawal is tax free. No other account has this level of tax savings. FSAs, flexible spending accounts, are close. The problem with them is that they don't allow for long-term growth, right? You only can roll over $500 a year. That's really not helpful. With an HSA, the money is yours and it can roll over each year and can continue to grow over time. So they're really cool accounts. I am a big fan of them. And it's why I have an HSA before maxing out your 401k, why I have it before contributing to a Roth IRA, things like that. The biggest gotcha though with HSAs is that you really should be paying any medical expense, you really should be paying any medical expenses that you have. Oh boy, any medical expenses that you have should be paid out of pocket rather than using the money in the HSA now. The reason for that is that it allows the account to continue to grow over time, get that tax deferred growth, and it will be much bigger in the future so that when you're in retirement and have medical costs, which you will, you're able to take that money out tax-free in the future, and it's already grown. Maybe it's doubled, tripled between when you contributed and when you're eventually drawing the money out. You do have to be on a high-deductible health plan for this to be an option, but if you have a full emergency fund, don't have any high interest rate debt, already making the 401k full match, and you have enough money and enough cash flow, enough savings building up that you can cover the contribution and whatever your deductible or out-of-pocket max is, either through cash flow or by having a larger emergency fund maybe, then this is just such a great option. And at the same time, the amounts that you can contribute are relatively small compared to maxing out your 401k, Roth IRA, ESPP. Like, you can contribute more to all those accounts generally than what you can to an HSA. So it's a relatively small requirement to get there from a cash flow perspective. But if you're already doing the 401k match, have a full emergency fund, don't have any high interest rate debt, an HSA is a really great option for the next level of savings. Thanks for watching. If you found this video helpful, please like, subscribe, and drop a comment below with any questions or topics that you would like to see covered. Financial planning is all about creating the life you want. Let's build it together.